Hi everyone, this is Nikki, also known as Faces Trader, and you're watching February 8, 2021, the Global Market Update. Let's begin. All right, so we've got a lot of great companies. I don't know how to begin, so let me start with a few penny stock names, should we? All right, so there's some companies that I'm taking a look at because it seems as if there's something happening between all these OTC names. Premier Products Group Inc. (PMPG) approved for the depository trust company FAST, which is Fast Automated Securities Transfer Protocols. Says here that it is a pink sheet announced that it has begun the process. That is December 30, 2020. The significant achievement underscores the effectiveness of the current management team in getting the company on solid footing and positioning it for future growth. We've made great strides in enhancing our relationship by making it easier for investors to purchase and take possession of our stock. This also helps us quicken the full implementation of our new business model, which is to become a full-service holding company. PMPG has completed the due diligence process of our Smart Road Turtle (SRT) joint venture product. Smart Road Turtle expects to have a letter of intent for manufacturing and distribution to be signed with Enos Flint in a few weeks. Who is Enos Flint? It is a global manufacturer of coatings with a broad portfolio of road pavement, marking products, thermoplastics, advanced traffic technologies, intelligent transportation systems. Let's take a look at Smart Road Turtle, which is going to be inside PMPG. It seems as if like some penny stocks are behaving like black chip companies. They are trying to revive themselves with a new business model, and this is one of them. The proof of concept phase by announced joint venture partner 6 days ago makes a major advancement in Smart Road LLC completing the phase. So let's take a look. People are saying, is this a scam or it isn't? This is a scam. Smart Road doesn't. So I don't know what it is, but let's try to understand what it is. So Smart Road Technology. Anybody heard of this company? So take note that these are penny stocks. I understand that we don't usually cover penny stocks. That's why we're gonna read up on it first. So it says on their website, Smart Road Technology, safe, secure, reliable, introduction letter, next generation of roadways, unifying infrastructure, rail and sea, home delivery applications with drones, 3D cloud security. So that says that about us, no other system of invention does what we propose. Smart Road Technology's patent pending disruptive innovation is a unifying infrastructure for all wireless protocols and technologies. So if they're doing what? Smart cities. Our system, we are a mesh network of smart pods adapted to any pathway environment to provide a GPS alternative, navigation and alert system, endless use cases for drone delivery guidance, winter weather guidance, three-dimensional navigation, works anywhere, everywhere, tunnels, bridges, road, rural bridges, and more. Get in touch with us. All right, so FAST says, so this flight says avoid drone registration schemes. That was 2018. That was fixed already because drones have been fixed by 2020. Actually, you've got Amazon, Walmart, all getting approved. So things have been shaping up well on the drones as a group. And we are happy to have our drones actually, drone portfolios. Let's take a look. Next gen navigation, smart road technology. So intelligent, adaptive, flexible, moms, pops, what's this? SRT systems. Let's take a look at their website. What's MOMS? This is multi-operation orientation monitoring system using geolocations for all pathways to assist and guide all vehicles in real time. The basic building block to this new infrastructure is the MOMS pod, 2 types of MOMS pod. So that's what they're saying here. Okay, open letter, MOMS, POPs. What's the POPs? POPs is a proprietary operational patrol system. It's a management system to SRT's smart infrastructure, uniting the multi-operation orientation monitoring system. Together, we will be a comprehensive smart pathway system for autonomous vehicles and human-operated vehicles alike. And they have the sector. It says here in their objective milestones, smartroadturtle.com, objectives and milestones. You could see the LLC. Self-driving or road pavement markers have the ability to transmit data and transform a municipality to a smart city. Every road turtle on the road can house up to 7 sensors interacting, transmitting data with automobiles. Sensors such as GPS, temperature, movement, environment detection, humidity, and environment, to name a few. So the solution framework, let's say that it's a smart sensor device, cloud-based AI platform, solving, partnering, monetizing, all right. Want to see, says your driverless cars, disclaimer. What I want to see is, do they have a legit product and do they have actual partners? So took a look. Some said that this one, top 10 road construction companies, potential partnerships. Stanley Road Construction, Muscat Civil Works, PNC Infratech, New Road Construction, Coco Singh Construction, HLG, Sanders Group, Rogers Group, RS Audley. Potential partnerships. This is not a reality yet. Potential. That's why it's called potential. Enos Flint, Microsoft, Intel, 3M, Oracle, Amazon, Intel, Tesla, automakers, municipalities, phone companies. So this is still a very infant company. I'm not sure if they really have contracts, but they want to do a contract with them. So we'll see. But so far, the market seems to be very much into this company. The ticker symbol is PMPG, Premier Products Group, OTC. It's doing what? From about 2 cents, it has rallied to 20 cents, or a 10x move in about 4 days since December to January. And so far, it has been consolidating here at about 10 cents. So that is still a 5x move since the lows here about 2 centavos that December. So I'm not quite sure if the reality is that Premier Products Group is a pump and dump, or is this a company with a legit change in business, but something to actually put on your watch lists? PMPG, Premier Products Group, these are the websites, Smart Road Technology. Okay, let's take a look at some more. All right, so you are all aware that it's Super Bowl weekend, and this is what's happening. Of course, in a Super Bowl, you've got people eating a lot of chicken wings, and 1,400,000,000 chicken wings are expected to be eaten. That is the Super Bowl chicken wingonomics. So how many wings are there for eaten during the Super Bowl? Ta-da! Chicken wingonomics. Americans will eat approximately 1.38 billion chicken wings on the Super Bowl weekend, 27 more million wings than last year. How do these chicken wings measure up? Well, it would do an end-to-end from LA Memorial Coliseum in LA, California to Gillette Stadium in Foxborough 28 times. You've got 3 times enough to circle the earth with 1.38 billion chicken wings. And you've got enough to put 640 chicken wings on every seat in all 31 NFL stadiums, almost 1/3 of the way to the moon. If each wing were 1 second, that would be 44 years. So that's the National Chicken Council. Usually with chicken wings, what are the best chicken wings out there? Chicken wing stocks. I'm not sure. This is not something that I do. I'm just doing this for like understanding. As in, I know about Buffalo Wild Wings, but I mean, people might probably just eat chicken wings that they've done by themselves, right? They might have just bought chicken from Tyson. I don't know. Let's see. Who are the major chicken wing producer? Buffalo Wings. Top 10 U.S. chicken producers grow in new directions. So I know about Tyson Foods. Top 10 chicken wing franchises for food entrepreneurs. 3 chicken producers controlling 90% of the market. So let's read that. So I'm aware of Tyson Foods. So Tyson Foods actually is still trading at 64, 66. This one looks to me to still, I mean, I'm not quite sure, but you know, there are saying that 3 chicken producers control 90% of the market and they're accused of price fixing again. So the accusations are Chicken Little, all right? So we'll see. How about like the biggest chicken wing franchises to consider here? The Wing Basket, the Atomic Wings, Wing Zone, Bonchon, Buffalo Wild Wings, Church's Chicken, Wingstop, Wings Over, Brewster's Chicken, Wings to Go. All I know that's listed is actually Buffalo Wild Wings. Let's see, BWLD. These are not my recommendations, but I'm just like, you know, just wondering, you know, is it still listed or is it already not? So Wingstop is listed. That's WING. What else is listed in the Buffalo zones? Let's see. Wingstop. Who are the competition of Wingstop? Wingstop is a $5 billion company, $155 today, rallied from about $50. Just wanted to be just interested with the charts of these names. Wing. So just a Super Bowl trivia note. All right. So Super Bowl is up this weekend. Has it always grown during the Super Bowl, or is it just a phenomenal uptrend? Anyway, you could see it very clearly. No need to be a technical analyst. It's very clear that it has risen from about what? From about as low as $20 to 180 $60 in the last, that would be about 5 years. So that's 9x your money. Says here that people love their chicken wings. Wingstop on Chicken Wings Super Bowl. Let's see whether the CEOs commented about it. 5 days ago, ahead of Super Bowl LV, chicken wing prices have been surging. All right, to get in on the frenzy, America devours more wings than ever. Restaurants have been doubling down. All right, why can't I read it? Wait. Sorry. Wait up. That is an important call. Let me just answer that. Let me stop. Okay, guys, let's still begin. Let's still continue. So, all right. So about Super Bowl, people are asking, all right, you know what? Me personally, I don't really bet on Super Bowl as a catalyst, but this is just really trivia. I just wanted to know what's happening. And so I was just like curious when I saw how many chicken wings are being devoured during the weekend. And it's like the official, surge, kind of like a spike on chicken wings. So prices surge ahead of Super Bowl with Wingstop. See, it's just that I couldn't read this news, so I'm gonna have to see how I could read it. That's February 3, 2021. What else are the stuff to share? Wait up. I'm just gonna read this because I'm just like interested what's happening. So US chicken wing prices jumped 20% this year ahead of Sunday's Super Bowl after record gains in 2020. So America has been doubling down and restaurants are even doubling down. Chains like Chili's have been investing in new brands. Wingstop is averaging almost 3 store openings in a single week. So America's appetite for chicken wings appears unending, and restaurants are just all doing all the rush to feed it. Might seem impossible, but the pandemic actually made one of the country's favorite menu items even more popular. After the government forced restaurants to close down, takeout and delivery orders took off. That sparked a surge in the purchases of wings, which are good for delivery because they don't get soggy. The effects of the boom have been widespread. During COVID, the value of many kinds of meat initially surged, climbing to an all-time high, including a 20% increase just this year that's been accelerating. Meanwhile, the stocks of restaurants like Wingstop are soaring. Chili's and Applebee's started even developing their own deep fried chicken wing parts. So, and now comes the Super Bowl, the biggest wing eating day, despite the pandemic limiting large parties for the NFL's title game. The number of chicken wings is recording 1.4 billion. 1.4 billion. So this is usually a week later is, of course, Valentine's Day, a top 5 occasion for wing purchases. Wings are just a very hot item. It is shareable and it just delivers well. Chicken is only adding to the marvelous run that it saw past beef as America's favorite meat in the early 1990s. Per capita consumption of chicken grew to an estimated 96 pounds in 2020, a jump of 60% from 3 decades ago, according to 60 pounds of beef. Yeah, all right. So interesting facts, but it's not a 10x move in case you're asking. I'll go ahead and answer you already. It's not a 10x move. I'm just like doing this because I'm just curious about the chicken wing story. Demand showing no signs of slowing down. Atomic Wings had chain about a dozen locations, mostly in New York and Maryland. In some cases, customers are content to even wait 2 hours during a busy sports watching day for orders. In a pandemic, sales have doubled at some outlets. So Domino's Pizza also revamped their wings, new sauces for the lineup in July. We're selling all the wings that we can get our hands on. And Hoots Wings, which is a restaurant concept, has found new interest from franchisees wanting to open one. Chili's and Maggiano's, both owned by Brinker International Inc., launched its Just Wings, and the brand is being delivered via DoorDash. So let me take a look at Brinker International Inc. Let me see about the competition of these chicken wings companies. Brinker International Inc. Brinker. All right, so its ticker symbol is EAT, as in kain. All right, so the ticker symbol EAT has already 8x. My gosh, 8 to 64. I don't study a lot of restaurants, not a lot, but interesting chart. Makes me want to study it actually. 54 breakout here. So those who have it, congratulations. You've been eating a lot of your food, and looks like this one is an interesting company. Let me take a look at Brinker International Inc. So, by the way, in terms of like restaurants, I'm actually looking to buy into Union Square Hospitality Group, the Shake Shack SPAC. We're gonna discuss that later on. But before we go there, segue first. Let me read about Brinker International, which is a restaurant company. It's an American company that owns Chili's and Maggiano's Little Italy restaurant chains. So it's here in the Philippines, we also eat at Chili's. Yeah, so we are aware of this restaurant. Welcome to Brinker investors. All right, we are glad that you are here. Our passion is to make people feel special, and we are the world's leading casual dining restaurant company. Founded by Norman Brinker in Texas, we have ventured far from home, but stayed true to our dots. We open and operate and franchise more than 1,600 restaurants in 29 countries, two territories under the names Chili's Grill and Maggiano's Little Italy. Our passion is making people feel special, and we hope you feel at each passion every time you visit one of our restaurants or our home office. So we started our story in 1997. This is Chili Heads. We exist to bring people in Maggiano's Little Italy. From our humble beginnings, we serve homemade Italian classics. This is like making me hungry. All right, so investors, let's take a look at that. How much is their market cap so far? And what are their sales? So supplemental information, webcast and transcript, October 28, 2020. Let's take a look at some of their events. Edited transcript. All right. Okay. There's been a lot of discussion about what a virtual brand is. It's just wings. It is not a disposable vehicle. We've committed to this brand for the long haul. Okay, so they're doing virtual brands. So in our entry to do virtual brands, we have the scale, the asset ownership, well-equipped kitchens, right technology, unbelievably strong operators who can focus and deliver consistently. All right, so this is what's happening around the world. We are aware of Deliveroo, DoorDash, Uber, Cloud Kitchens, Grab, all of them are actually doing what? Yeah, virtual brands. So basically you can have like any brand you want, and any company does not have to officially have a brick and mortar store. These are delivery first companies. And whatever sells best on a delivery mode, you just have a social media marketing arm and take all those orders with the DoorDash apps, the Deliveroos of the world. And speaking of which, Deliveroo is an IPO upcoming in the US, so you might actually want to take a look at that. Deliveroo is Australia's largest delivery, kind of like food delivery. It's the same as DoorDash and what Uber does, Uber Eats does, same thing. All right, so with that said, in our own operating environment, we continue to demonstrate strength and resilience. Our first quarter performance are testament to deliver results. So they're saying that they're doing what Chipotle and what Domino's Pizza has done, which is delivery first company. Now, turning to our second quarter, our expectations and specific guidance, we will end the continued progressive comp sales established during the first quarter. We expect Chili's to further build its positive traffic performance to this period. Very fine start, anticipating year-over-year improvements in operating performance. All right, so we're seeing what are they saying? The CEO Wyman Roberts said, all right, the question was by one of the research analysts by Piper Sandler. Are you comfortable with less discounting? Is this something that you would carry forward? All right. So Nicole, that's a great question. That's what Wyman Roberts said. We are, because we have such strong built-in value propositions in the menu. When you look at value scores across the country, across the category, Chili's has one of the highest, if not the highest, in casual dining. So value is built every day, and it's been out there long enough. That's really great, strong awareness levels, and we're not going to do limited time promotions in a historic sense. That's just not what we are. We don't see their effectiveness, meaning they're not going to do promotions. We're just trying to grow the business the best way possible. We don't see them being that effective, and so we're going to move what we think we can measure, which is more effective marketing channels. The team has done a great job building the database. Great job in execution, that the direct vehicle as consumers and guests come in. We're very comfortable with what we're doing beyond what's out there in the basement. All right, what's the next question about Just Wings? Nothing but incremental in terms of sales and margins. As soon as you talk about that, however, many months ago, it was, my email has been flooded out every single day with a concept doing the same thing. So everyone's doing the virtual brands. Now, so how do you ensure that your marketplace partners doesn't only lend the same support to your peers, especially given the data that they do have? Not that they would use your data and your name specifically, but nonetheless, they have your data. Okay, we've got a great relationship with DoorDash. Any partnership is built on trust. We trust them to do the right thing. We know they're treating us the way that our customers, we treat them. And so we assume that the same way we run our business, I have no concerns about my relationship with DoorDash. Tony is a very, has a business doing the right way. And we're partnering with them to grow the business in a very transparent way to make through thorough their site to be more effective to get the brand's awareness levels up. Yep. If you're actually selling food, your critical partner is a DoorDash, a Deliveroo, the Dada Nexuses of the world, the Meituan Dianpings of the world, the Grabs of the world, the Lala Moves of the world. The delivery service is your biggest partner. All right. So I get that. Okay. Direct to consumer about the delivery. Okay, let's just read more about the results. The question and answer portion. All right. You raise your development outlook. Is this a function of more sites or better visibility? Construction is set in motion. What is happening? So Executive VP and CFO said, okay, it's important to get the process going because development is a long-term process. We're opening new restaurants this year, a couple more next year. The work is being done with a bigger benefit. Second half 22 and 2023, we're going to be back up into and we're going to grow development side of the equation. All the efforts we're building the pipeline. It's very difficult to say the kind of really parse out impact depending on independence, development side of the equation. All right, so it's amazing to see that their company is growing, and looks like this go-to delivery is doing very well for this company, Brinker International. So 2:1 ratio. We're gonna go with delivery first, and market likes it. Guess there's more to understand. You can just go to their first quarter results, go to their events presentation. But it's good to see restaurant sector going all-time highs. We have seen, of course, Shake Shack doing that delivery first move as well. Shake Shack is ticker symbol Shack. And it has broken that $90. We've been bullish since $30, since $50, $70. And this is a happy thing to see. And we do believe that companies with a delivery first motive and the companies that are pivoted for that with a lot of franchisees, partners, especially because Shake Shack is like, in my view, like a smaller McDonald's. It's a better McDonald's. So yeah, I'm just bullish on these types of restaurants. So I'm bullish on companies that are able to pivot, and these are yeah. Brinker International, I don't have it, but I guess that they're doing well. So good to see that. Maggiano's, Little Italy, Chili's, so doing well. All right, Wingstop also doing well. What else can I say? There's a lot of companies to share, but I'll try to see your questions. All right, hello from Toronto. What are your thoughts on AMC and GME? I'm actually looking to see that I do think the GME's stock seems to be in a support here about $40 to $60. AMC at about $5 looks to be tradable. Do I need to upload the chart or is that enough? GME 40 to 60 looks to be a buy, and you sell it at about $150. I took a look on the chart already earlier in the morning, so the chart is already in my head. All right, AMC it's about 5 to 9 move. Hi, Miss Nikki. If you have to choose, which would you let go of, Affirm or Rocket? I like Affirm Holdings more than I like Rocket loans. So Affirm is now trading at $104. Rocket is trading at $21. I like both names. Nonetheless, Affirm is not really a company that is the only company for buy now, pay later. As you could see, there are many companies that are doing that. Afterpay is doing the same thing. It's just not listed in the US. Afterpay is listed in Australia. So I think like between these two companies, they're different, okay? Affirm is fintech, Rocket is fintech, true. But Rocket is more on the mortgage housing play. I believe that Rocket is going to go up. Like 21, in my view, is a buy. Affirm at 104 is also a buy. So if I could choose, I choose both. I don't want to choose to let go any of them. Hi, Nikki. What's good to you? I'm also an IBKR. I just want to ask, if after you wire transfer your earnings from IBKR to a PH bank, you have to pay capital. There's no capital gains. If you're going to withdraw it, you got to withdraw it in dollar account. So example, IBKR, that's assuming your IBKR is in JP Morgan or Citibank, so each person actually has their own bank account with IBKR. So that's like JP Morgan example. Going to your Philippine bank, let's say your Philippine bank is BDO dollar or BPI dollars, then you're actually just, that's it. Like, ever ask people, the ones who've invested in Amazon, Apple 5, 10 years ago, they ever pay taxes on it? No. Hi, Nikki. Do you know about Moissanite stock? It's a cheaper version of a diamond jewelry in the market. It's currently trending on TikTok, ticker symbol CHTR. Actually, I'm not aware of it. Thanks for bringing it to my attention. Moissanite, CHTR. Wait. Let's chart your communication. Wait. What's the question? CTHR, sorry. CTHR. All right, CTHR. Charles and Colvard, 17% up. All right. So is this like a company that's moving into buying up companies? Let me see. News. CDHR, Charles and Colvard, latest stock news. About to get hot Tuesday. Also includes Moissanite gemstone in the jewelry market, surpasses quarter two earnings, beats by 6 cents, beats on revenue. If you had bought Charles and Colvard, should you buy it? The luxury goods industry. All right, so this might be a luxury play. All right, why has it happened? Charles and Colvard, a big earnings beat reveals a major step forward. Let me try to read up on it. Let's read it all together now. So Charles and Colvard, February 2, stock has risen 36%. What is happening? The company manufactures, markets, distributes finished jewelry, including Moissanite gemstone in the jewelry market. The company sells through online channels, so it's a D2C market. So people love to buy the Moissanite gemstones. What's a Moissanite gemstone? Is it like a diamond? Moissanite versus diamond. It's a naturally occurring. Learn the key differences between Moissanite and diamond, including durability, brilliance, and color, how to select the ideal gem. Won the Nobel Prize in Chemistry. He discovered microscopic particles of the gem that eventually bear his name, Moissan. In a crater in Arizona, after many years of trial and error, Moissanite is engineered to give an illusion of similarity is an alternative to diamonds, so and so. So is this a view of the future? Some men or women are buying up some jewelries and they don't need diamonds. Are you okay with a diamond ring or a Moissanite ring? Let's read. All right, the stock price is trending up. All right. So should you buy Charles and Colvard in the luxury goods industry? I want to see the earnings, guys. Did the people actually buy Moissanite rings? So they beat by 6 cents, revenues of about $12 million. Great performance, gross margin. All right, so let's read the gross margin, guys, 50%. That means for the people who don't know what gross margin is, it means that they sold at 100, their cost was 50, so 50% gross margin. That's how good it is. So it means that it's a high margin product. Wow, growth was amazing. The earnings per share was 200% year on year. They're accompanying their slides. All right, Charles and Colvard. Is this like a new jewelry related in thing today? Let's take a look. How good is it? We executed with purpose and precision. So the only jewelries I know are like Cartier, LVMH bought like Tiffany and Co, you know. And so if they're selling well, net income of $2.5 million, $12 million, you know, this could really do well. I mean, I'm okay with this. Expanding the product assortment of bridal, fine jewelry styles, including engagement rings. Is it cheaper than a diamond ring? Is that why it's being bought up? Let's see. Net sales increased. Online sales consisting of e-commerce, drop ship. Net sales increased 25%. Traditional segment totaled 4.6, just flat. So they grew a lot on their e-commerce here. Finished jewelries increased 30%. Loose jewel net sales. All right. Why are people buying diamonds? Or, well, in this case, moissanite. Because it looks good. Is that it? They believe that fine jewelry can be accessible, beautiful, and conscientious. Original pioneer of lab-created moissanite, a rare gemstone formed from silicon carbide. So, Forever One moissanite brand and its premium Kydeal lab-grown diamond brand. Consumers seek Charles and Colvard fashion. All right, let's go to the website. I'm like interested. Like, looks good. Like, looks good. Looks good. Brilliant Earth. Selecting a moissanite, you could really be deceived. Like if I didn't know that this was moissanite, I'd have thought that this was actually a real diamond. Most popular moissanite rings. Shop moissanite petite. So maybe upcoming wedding and it's an other affordable diamond alternatives. So it's an engagement ring, dazzling settings. So yeah, how much expensive? How much is a moissanite ring versus a diamond ring? I want to see the cost difference. A quick search online tells you that young girls know a diamond ring versus a moissanite ring. She might not say yes. Joke. All right. But I guess it's a good gift. Moissanite rings. So Valentine's Day deals, shop sparkle. Looks like people love the them. So when people love you, then you've got a market and $70 million. So that's like what? Just 5 times price to sales, and they're growing 200%. May 13 upcoming earnings. I think that the reason why people are buying up this stock is simply because of value. They're seeing value in this name. So I could agree with this. All right. So it has risen 5 times from about 50 cents to almost $2.50 because their sales also doubled, right? So I think like there is a sustainability of this trend though. So the lowest that this could do is maybe $2. The highest could go as high as where? Let's take a look at the resistances. Perhaps you've got resistances here at about $4. Luxury market 5 years trend. So far, they're showing that the market seems to be basing here at $1.50. Very strong support at $1.50 and possibly a breakout here at 250. The next move is $4. On the question on about this moissanite ring, I think it's okay. Tia Murphy, I think you got a good diamond ring here. Apparently, you don't need to mine these diamonds, which is very good to the environment. Okay, so probably people like a diamond ring without having to pay as well that expense. It's like a diamond ring, $4,000. A moissanite is $400. So I think it's about the cheap factor. So it's an alternative to diamonds. So I think like that's the reason why it's selling well. I'm not quite sure, but it could be the reason. Might have to investigate further now about the chart. I'm okay with it. If you have it, $2.50 is okay. $2.50 to $2 seem like a good entry point. $4 probably your resistance. Taking a look at some Toyota robots. A glimpse of Toyota's robot amplified feature. Let's watch this, guys, together. Toyota Research, well, this is 2 years ago. 5 years ago, basically, Toyota Research Institute spent about $1 billion for a human robot world. So let's watch this.
A robot is a much simpler version of a car. Toyota's expertise in managing that kind of supply chain is going to be directly applicable to designing, manufacturing, deploying, servicing robots. We have organized our robotics research into 3 primary topics: the home, the factory, and enabling technologies. TRI's research is poised to make breakthroughs in manipulation. So you will see our robots picking things up and using tools, helping a person put heavy things away, taking things out of a grocery bag and putting them in the refrigerator. One of our best ideas for using robots around the home is telepresence, allowing the older adult to be in an environment that their body is not able to go to. But using the TRI robots, you might be able to and see the robot, the market opportunities in robotics, and they're all shaped like this.
Guys, I'm very bullish on robotics as a sector. We do have some ideas in the robots. But yeah, so you know about Toyota. This is actually a very good article. Toyota Research Institute, this was October 8, 2020. They showcased their latest robotics research aimed at amplifying human ability in the home. So this is a 36-minute video. Try to watch it. TRI Robotics Virtual Open House, 360 degrees. So we are living at a time where, robots are not going to replace your job. They're going to actually augment, help you, mobility, they're going to help more people rather than replace people's jobs. So I'd say that just welcome the world, the technology and everything in it. TM is actually also trading near all-time highs. TM is now trading at $150. So it's listed in Japan, but it's also listed in USA. Take a look at these names, $145, 7-year breakout. I'm not quite sure, but me personally, I'm bullish on Toyota Motors because they've got more than meets the eye. Like, I think the market is not quite, put it in your watch lists. More reasons to own companies. Well, there's a lot really, but I have a lot of buy ideas. This one is good. Let me share to you one name example. Senseonics. All right. So it's the creators of the first and only long-term implantable CGM. So if you are aware of Dexcom, so about like these glucose monitors, this is what it is. So it's a glucose monitor. It's this way. Explore the technology. So Senseonics is a company that has been rallying because, in my view, they have a market, which is, of course, the diabetic market. All right. So rallied from about 40 cents to as high as $4. Typically, these names could go down. That's why it fell here about $2. And then consolidated from about $2 all the way up to $3. So this isn't you being early. I'm just sharing to you like, okay, these are what's happening in the market. A lot of penny stock names. This is what, just January to February. So indeed, the market has roughly made 10x moves, not necessarily in your GMEs or your AMCs only, or your SPACs. Indeed, you can see that a lot of trending names like these are where the Robinhood money's at. So Senseonics. So you can see that there's a trading range from 2 to 4. What is it? News and events. Let's try to see. Publications. Implantable continuous glucose sensor over multiple sensor insertion and removal cycles. So sometimes the market is not necessarily seeing that it is a penny stock. What the market sees is that they've got a lot of news releases and it's possibly just simply undervalued. So let's read this, the news per se on Senseonics. In February 1, they said that initiation of European commercial efforts by partner Asciencia Diabetes Care. In January 28, we're closing $115 million bought deal offering to purchase additional shares. And then increasingly announcing bought deal offerings, $100 million, $50 million, a positive coverage decision for Eversense CGM from Emblem Health, another $50 million registered direct offering, announcing equity grants to employees under inducement plan. That's just one of the news releases seen here in 2021. Let's take a look at 2020. A business update, December 23, a third quarter results, credit financing agreement, participating in Credit Suisse healthcare conferences. employees under inducement plan. All right. So it's interesting. So let's read up on it. Says here, January 28th, Senseonics is focused on development and commercialization of implantable CGMs, also known as continuous glucose monitoring systems for people with diabetes. Today, they announced a closing offering of about 60 million shares at a price of $2 per share. Sorry, it's $1.92 per share. The gross proceeds of the offering will be used to discount estimated offerings since regulatory approval to support our collaboration with Ascensia Diabetes Care, funding working cash and cash equivalents will be sufficient to fund with cash flow break even from operations. So it's really a diabetes monitoring system, glucose monitoring system. Senseonics is a med tech company designing, developing, commercializing, transforming glucose monitoring products designed to help people with diabetes confidently live their lives with ease. Senseonics CGM systems, Eversense and Eversense XL, includes a small sensor inserted completely under the skin that communicates with a smart transmitter worn over the sensor. The glucose data is automatically sent every 5 minutes to a mobile app on the user's smartphone. Actually, I have personal understanding of this because my mom is also diabetic, so I'm aware of these glucose monitoring systems. You might be aware of that of a bigger company in the glucose monitoring system that is actually Dexcom. So when you compare the market caps of Senseonics, I can understand why the market is buying this up. Let's take a look at the market cap and the sales of Senseonics. Let's go to finbiz.com just for easy access. The ticker symbol SENS. So Diagnostics and Research USA, $900 million market cap. Okay, so don't need to look at the income and sales because if its company is going to grow and they're moving on to a lot of new shares being sold and to partner with a lot, you could see that these big moves are mostly about their business update. In fact, December 23, it went up 50% precisely because of earnings. I'm actually interested, so it's going to read on the business wire. Senseonics, first quarter, okay, recent developments. Revenue has been expected to be approximately $3.5 million. They received communication from the FDA explaining the reallocation of agency resources to address emergency use authorization applications for products related to the COVID-19. So inclusion of Eversense category and for Medicare, establishing global payment for device cost, reach agreement with Roche to facilitate transition of distribution to Ascensia as Roche sales conclude, including final purchases. Strong fourth quarter performance driven by sales in Europe and supported by Ascensia's initial US sales. I guess the more important thing to say here is who is Ascensia. So let's take a look at the Ascensia sales here. Ascensia's is established in 2016, World Diabetes Care, by PHC Holdings, also known as Panasonic Healthcare Holdings. So they're a $900 million company, and these are the products: Contour Plus blood glucose monitoring systems. If Senseonics is going to be partnered with Ascensia's, then you're going to see more distribution of this Senseonics. So I understand why the market is bullish, and I would agree with this. The Eversense CGM systems, so you can learn more about it, Senseonics. Announcing a positive coverage decision, Emblem Health. Let's just read through the news, guys. Who is Emblem Health? They are now providing coverage for the Eversense CGM systems effective immediately. This is January 19th. This recent coverage decision adds to the growing number of payers who are writing Eversense into their CGM's coverage policy as a way to provide time for the in-office sensor placement. Added coverage will approximately be covering expanding 3 million residents of 3 states. We're very excited to see additional coverage for Eversense, appreciating the payer community's recognition that CGM is now standard care for patients using insulin to manage their diabetes. PhD President and CEO of Senseonics, Tim Goodnow. I'm good with this. Improved glucose control has always been the goal for healthcare professionals and patients. Eversense offers patients a new choice amongst the CGM class, and Eversense is indicated for continually measuring glucose levels in persons under age 18 and older for up to 90 days. finger stick, BG per measurements, and then you can see about this. All right, so that's a product. Okay, the bigger product in this diabetes market, of course, you've probably heard of Pod and Dexcom. They're in the realms of billions, guys. DXCM is Dexcom, the leader when it comes to all these diagnostics as well. There's a company that is $38 billion. You heard me right, it's 38 times. So even if Senseonics is just a small player here, I do think that Sense is actually going to go higher. So for those who have Sense, just hold on to it. Pia is asking, do you have plans on opening a Discord account? So far, my clients are under Slack and my clients are also under Viber. I could open a Discord, but the point is give me some time, because the problem is that I've got so much data in Discord, in Slack and in Viber, that it's a little bit hard to just like transfer things to Discord immediately. So there. Are you a member, Pia? Are you a member of Awesome10X? Awesome10X Inner Circle has Viber. And about the plans on opening a Discord account, I thought about it actually, because the good thing about Discord is actually it has unlimited message history for free accounts versus in Slack wherein it's limited to about 10,000 messages. And I talk a lot, so 10,000 messages is not going to be enough for me. Therefore, I have plans. I have plans on opening a Discord account. I have a Discord. I'm just not yet populating it in a single day. So there's just like too many stocks to think about, too many classes to also discuss. So and we have only 24 hours in a day, so can't do everything all at once. All right. Okay, thank you very much, and hope you learned something today. Don't forget to like, subscribe, and share. It's been an hour already. Didn't notice the time. Thank you very much, guys. Bye bye.